This cannot be happening right now. The second consecutive month of price increases in the median sales price.
And in my research, I stumbled across the Economist, who changed their stance on the housing market now since we're halfway through the year. So make sure you stay tuned for that.
How did the Fed raising the fund rate affect the median sales price year over year? And so during this time, I'm just digging into all the information so that I can give you a well thought out response to what's going on in the real estate market. I got it. Let's do this. When I saw the median sales price in Ada and Canyon County both rise for the second month in a row, I had to do some digging because every one of our buyer clients so far this year have either bought a house on their last listed price or they're currently under contract below the last listed price. And so far, the biggest decrease this year to date for our clients that are buying a home is $175,000 under last listed price. So why are we seeing this increase in the median sales price? You see, Hayden Homes is still offering $25,000. Hubble Homes is offering $20,000. Toll Brothers is offering, and this is their entry-level collection, $47,000. And just a month ago, they were offering $42,000. So they increased their seller concessions instead of decreased. Why? Let me know in the comments below. Tresidio is offering 2% on some of their homes, and this is just what they're disclosing. And let me share a quick thing of what a builder's agent told me. You see, we were sitting down waiting for our client to come in, and he shared with me that they're still not selling enough of their higher end homes or the higher collection. And so they're offering a bigger discount, upwards of $25,000 or more on the bigger collection or the higher end collection versus the entry level collection. As I'm just kind of processing and thinking about this, one of the reasons why I believe this is because of the interest rates. Interest rates are still sitting right around that 7%. And later in this video, we're going to break down what that percentage is. You see, in the Midwest, according to National Association of Home Builders, the Midwest permits are down 24% year over year. And nationally, we're down 25.5% year over year. What is the Mortgage Bankers Association sentiment? According to their article, purchase applications are still down 32% lower than the same time last year. So what's the buyer demand or the buyer sentiment here in Boise? Currently, people who are looking to living in Boise or their plans to move here, there's only about 31% of homeowners who are actively searching to relocate outside of Boise. On the other hand, 69% of the buyers that are currently looking, according to Redfin, are buyers who currently live in Boise. This means that perhaps they're looking to buy a new home or they want to stay within the Boise vicinity and they're currently renting. But where are those 31% of Boise folks who are planning to move out? Well, according to data, people are either thinking about moving to Twin Falls, Sandpoint, and surprisingly, Miami. There's only about 0.44% of homebuyers nationwide that are searching to move into Boise from an outside metropolitan area. When we break this down, some of you guys probably already know where a majority of these people are coming from.
California again.
Los Angeles leads the pack, then it's followed by San Francisco and Seattle. And I wonder why. What does the mortgage look like for the median sales price nationally and then here in Boise? The median sales price for the nation is right around $437,000 with a rate of right about 7.459% for a 30-year fix. We're assuming that you're going to put 5% down. This gives you a monthly payment of $3,043. Now, this doesn't include personal mortgage insurance because remember, you have personal mortgage insurance on the loan until you reach that 80% loan to value ratio. And taxes and insurance, again, this is not included in that payment. So if we were to add all these things together, it's going to add an additional roughly $350, which puts your payment right around $3,400 a month for a $437,000 mortgage. Now, let me just break this down a little bit further so that you understand. If you were to buy the median sales price home without buying the rate down and putting only 5% down, you're going to be spending roughly $45,000 a year on your housing expenses. But what is the median household income here in Ada County? Right around $70,000. So that means we're sitting over 50% of the median household income is going towards the median household monthly payment. Keep in mind that in May of 2022 was the peak of the median sales price for most of the country and here in Boise, Idaho. According to the Boise Regional Realtors data, our sales numbers are down 17.9% in the year to date. In 2022, the sales numbers were down 5%. I know some of you are thinking, well, yeah, that's because our inventory is down, and I can't argue that at all. But think about this. Our median sales price is down 12.2% year over year. And there are roughly around 8,000 homes sold between last May and now that are at risk of negative equity and being upside down from what they bought their home for. Yes, some people put a good amount down and some people even bought it in cash. But there are two things from Bankrate you need to know. First, the median down payment for the first quarter of 2023 was only $26,000. And home equity line of credits are at the highest they've been since 2010, with an outstanding balance of over $336 billion. And in Q3 of 2023, there were 322,000 HELOCs originated compared to only 220 in 2022. Again, this is the highest amount of HELOC outstanding balance since 2010. The reason this is important is that the Fed fund rate contributes directly to the rates of HELOCs and car loans. With Jerome Powell, although yes, he did pause, he also mentioned that he's planning to do 2 more rate hikes this year. And how much more can the American people stand this pressure? I mean, there's this pressure building up, no pun intended, in our economy with home values decreasing, and yet the debt on them is still high and even increasing. Until we see it pop, our inventory is not going to skyrocket. But things are changing. I mean, look at this Realtor.com's update forecast. They originally, at the beginning of 2023, said that home prices are going to rise 5.4% this year. But now, actually just last week, they came out and modified it. Now they're coming out to say, with their new forecast, that home prices are going to drop 0.6%. And I wonder how much that's going to change by the end of the year. Let me know in the comments below. They also went on and projected that rents are going to rise 6.3%. But now they're changing their stance on that. And they're projecting that rents are going to drop 0.9%. So now they're admitting that there is this shift happening in the housing market, where before so many people had their heads in the sand and they were denying the housing market is in fact shifting. So the question again rises, why did the median sales price rise 2 months in a row? Well, let's look at some of the sold data for the month of May. About 1 in 4 homes were being bought in cash. Now, what we don't know about this cash buy, we don't know if somebody pulled out a HELOC from their house in a different state or even their house here locally to be able to buy a home cash, or if they sold their house and bought it in cash. We don't know those factors. Now, what about Canyon County? Our inventory did get hit pretty hard, sitting 21% less than the same time last year. Well, let's talk about this for a minute. I know a lot of you have heard people said inventory is not going to increase because people don't want to give up those low interest rates. Although there is truth to that, you cannot overlook the fact that some can't sell. One reason the inventory is not increasing, at least for now, is some people literally cannot sell their home without doing a short sale, bringing money to the table. And if you've been watching our channel, then you've heard me and fellow agents come on and say that some sellers wish that they could sell, but after they meet with an agent, they realize I'm upside down in my home and I can't. But now I also want to ask you another question. Does this remind you of a different time in the housing market? Demand is down on pending sales. See, our pending sales is outperforming the decline of the inventory. See, year over year, our pending sales are down 25% when our inventory was only down 21%. The demand is still declining faster than the inventory is declining. And look at the days on market. I mean, this has almost doubled since this same time last year. Demand is not dead, but it's definitely not like it was, like how we saw it at the last quarter of 2020. The other thing that's very interesting is 1 in about 2 homes were getting some kind of seller concessions to help them buy down their interest rate. Remember the example I shared earlier about the monthly mortgage payment? Well, let's say you go and get a good chunk of money from the seller as a seller concession or a seller credit. And let's say it's enough to buy down your interest rate 2% to 5.5%. We're going to use the same scenario for the Ada County median sales price of the $505,000. Using that, assuming they're putting 5% down, their new monthly payment is only going to be $2,700 a month. Now, you add taxes, insurance, and personal mortgage insurance, you're roughly sitting around $3,000, $3,100 a month. So instead of paying $45,000 a year towards your housing expenses, you're now only putting $36,000 a year towards your housing expenses. So you're now saving around $9,000 a year in your home expenses. The problem with this is this allows the prices to stay inflated instead of coming down to a more affordable level.